Caitlin, a management consultant, owns an investment property and rents it out with the assistance of a real estate agent. The agent provides Caitlin with a statement of rental receipts and expenses at the end of the current tax year. However, there is an error in the statement, which omits the rent received for the month of January. Caitlin does not check the statement and includes an incorrect amount of rental income in her tax return. What interest and penalties will Caitlin be subject to? When a taxpayer has not complied with the tax laws, they may potentially be subject to penalties. Broadly, these can be split between administrative penalties and criminal penalties. Administrative penalties cover areas such as where a taxpayer makes a false statement or makes no statement, where a taxpayer fails to lodge documents on time, where a taxpayer fails to withhold or remit PAYG withholding amounts, where a taxpayer has not kept or retained the required records, or where a taxpayer prevents a tax officer from accessing records. Penalties may also arise under the anti-avoidance provisions, such as Part 4A. An example of administrative penalties relates to statements made by the taxpayer, either directly or through their agent. The base penalty that will apply in such a situation will depend on two elements. Firstly, on whether there has been a shortfall in tax payable, and secondly, on the behaviour that led to the misstatement. Where there is a shortfall in tax payable, the base penalty will be a percentage of that shortfall. However, in some situations, a misstatement might not lead to a shortfall. For instance, a taxpayer might claim a false deduction where doing so increases the size of their loss and so does not directly affect the tax payable for the relevant year. Where there is no shortfall, the base penalty will be a dollar amount, calculated in terms of penalty units, the value of which can change over time. In terms of taxpayer behaviour, a taxpayer may have treated a particular matter in a way that is not supported by legislation, case law, or ATO guidance. In other words, the taxpayer does not have a reasonably arguable position. In the alternative, a taxpayer may have made an incorrect statement as a result of failure to take reasonable care, in a reckless manner or intentionally. The base penalty increases where then penalty units or percentage of shortfall, as the seriousness of the taxpayer's inappropriate behaviour increases. Note that the penalty for no reasonably arguable position is only applied where there is a significant tax shortfall. For an individual, a significant tax shortfall is the greater of $10,000 and 1% of the tax liability on the individual's tax return. For a partnership or trust, it will be the greater of $20,000 and 2% of the tax liability based on the taxpayer's tax return. If a taxpayer has hindered the commissioner, such as by obstructing their investigation, the base penalty is increased by 20%. If, on the other hand, the taxpayer has made or makes a voluntary disclosure to the commissioner, then the base penalty will be reduced by 20% or 80%. The 20% reduction is relevant if the disclosure is made after being informed of an investigation, whereas the 80% reduction applies to voluntary disclosures made prior to being informed of a tax investigation. Further, if there is a tax shortfall of under $1,000 and the taxpayer has made a voluntary disclosure, then the penalty may be reduced to nil. If a taxpayer can claim a defence, then they will not be subject to these penalties. A defence will apply where the taxpayer and their agent, if they used one, made a false or misleading statement, but took reasonable care in making the statement. Also, there is a safe harbour defence where the taxpayer provides their registered tax or BAS agent with all relevant information, and the misleading statement of the agent was not due to intentional disregard or recklessness. There is also a defence where the taxpayer followed the ATO's advice or administrative practices. Caitlin has admitted the rent received for the month of January based on the statement received from the real estate agent. Here, Caitlin may be subject to administrative penalty on the basis that she has failed to exercise reasonable care. A reasonable person may have noticed that the rental income appeared low and checked it against bank statements. Caitlin will pay less tax as a result of this error, and therefore a tax shortfall arises. Caitlin is potentially liable for a penalty equal to 25% of the shortfall. However, if after lodging her return, she becomes aware of the shortfall and informs the Commissioner, her penalty may be reduced. In some situations, taxpayers and their agents might be subject to criminal penalties. This will only be the case for more severe breaches of the law. Criminal penalties are harsher than administrative ones and might include jail time. Interest penalties may also be applied to taxpayers, including the General Interest Charge, or GIC, and the Shortfall Interest Charge, or SRC. Where a taxpayer is late in paying the ATO or underpays the ATO, the General Interest Charge might be payable. This would apply, for instance, where a taxpayer does not pay the PAYG instalment on time. The GIC rate of interest changes every quarter. To calculate the relevant amount of GIC, the relevant daily rate is applied to the number of days the payment is late. In some situations, the shortfall interest charge will apply. The SRC will apply where the original assessment amount has been increased due to an amended assessment. The rate for the SRC is lower than the GIC rate by 4 percentage points. Like the GIC, the SRC is applied on a daily compounding basis. It will be calculated according to the number of days between the due date of the original assessment and the day before the amended assessment is issued. Note that both the GIC and the SRC are generally tax deductible for the taxpayer. To recap, there are a number of penalties that can apply where the taxpayer breaches tax laws due to misrepresentation and other acts. Penalties can either be administrative or criminal, depending on the severity of the offence, and may comprise of one or more penalty units, penalty amounts, penalty interest, or even jail. The behaviour of the taxpayer is often looked at in the imposition of penalties, and there are a number of defences available to taxpayers that can help to reduce the extent of penalties.